let's welcome our another market voice on the show. Prasoon Gujri of HDFC Life joins us on the show. Hi Prasoon, good afternoon and thanks a lot for joining us. How are you assessing the entire situation because of this coronavirus which has spooked world equities now? There is relentless selling pressure not just for Indian equities. We've seen that for US markets, for European markets, as and when the virus is escalating to other countries. Do you think the entire damage has been priced in when it comes to equities, or there is more downside left?
No, I don't think the damage is priced in, especially if this lasts for more than, say, next 4 weeks or so. So I don't think that damage is priced in. And today it's very difficult to say when we will see the end of this. So whether it's 3 weeks, 4 weeks or longer, it's a very difficult call to take for the markets. So I would assume that the worst is not yet priced in on that count. So from our perspective, the way we would look at it, clearly if this continues, it will have a negative impact on two counts. One, clearly the global growth, and as a consequence also will have an impact on the domestic growth. And secondly, and more importantly, what has been going right for the Indian markets have been the flows. So this will have a negative impact on the global flows, and a fall in market hopefully will not have much impact on the domestic flows, but again that will be a risk one will have to really consider. So all in all, I think short-term volatility is here to stay till we get some clarity on how this really pans out.
Expect Prasoon for the flows to come back, because we've seen FIs selling a lot in last few trading sessions, and a lot of market experts have been mentioning this looks like ETF related selling which we're seeing from markets. Or one should who want to invest for long term should start looking at good quality fundamental stocks at current levels and start nibbling in.
Oh yeah, I mean, end of the day, if you are a longer term investor and not really looking to trade, these are good times. I mean, they are seeing some good corrections happening in some of the stocks. So yes, we remain invested. So in this market, we are not really going to be sellers of any kind. We remain invested. We believe that this gives a better opportunity, because there is always a little bit of concern in some names that the valuations are high. So if this is giving a better opportunity, I think that should be looked at positively. From a medium to longer term, we do believe that the earning growth will be better in FY21. There is some recovery in the economic growth as we go along. Hopefully, if this current episode of this virus doesn't last too long, we are seeing some green shoots in the economy. So put all that together, we remain positive from a medium to long term perspective. And if this correction gives a better opportunity, I think that should be utilized by investors who are investing for the longer term.
All right, I just want to look at the Feb series performance. So obviously this is going to be tarnished by what happened in the last 1 week, and the impact of that is not just witnessed on the broader markets, indices and the banks and the benchmark index itself, but individual sectors and the kind of damage that each of them have seen. Just look at real estate. It's been down 11% already. Following that, then you have your PSC index, your metals index, your global cyclicals, everything have lost ground. The only one that's probably maintained a little bit of decorum in this chaos is IT, and that's that's down just 1% or so. Is it time then, Prasoon, to look at being a little defensive, playing a safer game here, and while not letting your money sit idle, trying to make investments through that approach?
I would not want to go overly defensive either. So the way we are approaching this is that whatever we believe and wherever we believe the earnings growth is going to be reasonably good over the next 12-18 months, and the valuations are not too onerous. They may not be cheap, but they are not too onerous. Those are the kind of places we are looking at. And at the margin, we are also looking at areas where the earning growth is reasonable, not too high, but the valuations have been completely beaten down. So these are the two spaces we are interested in at this point of time. So this may give us a better opportunity to kind of find some of these spaces, especially if very high valuation stocks correct a little bit. So from that perspective, we are not looking to go overly defensive in this phase. At least that is the view we hold currently. So we will not really alter our portfolio for the short run, because our view is on a more longer term basis.
Okay, so probably not going over defensive. Then in light of that, Prasun, just comment on some of those pockets which just started to see a little bit of a recovery, and then the whammy of coronavirus just decimating them. One was in metals. You just about started seeing some interest coming back into the metals pocket. Prices were picking up, and then this happened. Real estate. You saw the bout of interest coming back into commercial real estate stocks like Godrej Properties, DLF. Everything started to pick up a little. Though there was no meaningful telltale signs of a pickup on ground, but at least the listed space was active. And now this has come in where it's once again dropped off the cliff. In these pockets, high beta pockets, would you be a seller if they are in your portfolio in anticipation of further damage?
See, we have very limited exposure to both these sectors. So these are not very high market cap sectors in the context of the overall market. So we have limited exposure in some good quality names. So we are not really looking to change that positioning, at least as of yet. And we don't have an aggressive position in any case. So we will maintain what we have at this juncture.
Prasun, good afternoon. Neeraj here. Just one or two questions. One is, forget what happens to stocks. Where is it that you are of the belief that the earnings projections for the next 2 or 3 quarters, looking at all that's happening both in India and abroad, is easy? And where is it that it's nearly impossible?
See, earnings look reasonably good for the next financial year from the financial sector. So that is one, driven by the lower credit costs and some growth, hopefully coming back in the credit over the next 6 to 12 months. So yes, financials look better. Hopefully we'll see a little bit more pickup in the auto space, given a very bad year in the past. Some pickup in the telecom as a sector per se, the earnings should improve. We were hoping for earning improvement in sectors like metals, so that is something one will have to be watchful of. So these were some of the sectors where the earnings were more likely to come through. So on financials, we still maintain, while there may be some kind of a moderation, especially if the economic growth suffers on account of this issue. But overall, we continue to believe that the earnings growth from that particular sector will be reasonably good. Autos, again, some question marks if the growth suffers and there is lesser of a sentiment for consumption. But at this juncture, we still believe that there is some positive news which could come up from the sector. Similarly, telecom, we believe that is something where at least the earnings for the overall sector will improve. Whether it's, one looks at a particular stock or not is a separate question, but for the overall market, the earnings will improve. So yeah, so I don't see there is any major reason to downgrade whatever estimates we have for FY21, at least as yet. And those estimates look reasonably good. We believe at least high teens to close to 20% kind of earning growth is very, very possible. And with that, we don't believe there is much to worry about from a market perspective, barring obviously a global risk-off kind of a scenario which could emerge if this problem becomes bigger.
Yeah, it's showing some signs of that. Let's hope it doesn't get exacerbated. But Prasun, great having you. Thank you so much for taking the time out and speaking to us at Bloomberg Quint.
Thank you so much.
Well, that's the view from Prasun Gajri of HDFC Live.